Hey guys, so it is officially January 2nd, 2026, and I want to go over six stocks that I want you guys to keep on your radar for the entire year because these are six I will be watching. And so, with these, I kind of want to just go to the chart, show you guys what I'm looking at, some of my plans for some of them, and a little bit of news on them that you guys can kind of keep alongside whatever you decide to do with them in your own plan. Okay, so I have six that I want you to watch. I am primarily a swing trader, so I am definitely looking at some long-term trades for these. And I, of course, have some of my others like Tesla, SPY, QQQ, Apple, Mad 7, really, that I still look to do my day trading on from time to time, as well as additional swing trades. But these six have been some of my top for the entire last year, and so they're definitely carrying over into this year. So let's go to the charts. Let's look at all six of them. I'm going to map out some levels that you can use for long term, as well as looking at some of them for day trading as well, however you decide to do it. The very first one we're going to look at is SoFi. Now, SoFi is one of those ones that I officially have 550 shares in. I've been collecting these things since they were $6, when we got to $8, when we got to $12, and we are officially at about $27.48 as it's going in the post market. Okay. Now, the main thing I want you guys to really look at with this, well, I guess I would say understand with it. We are seeing the younger generation. I don't know. I guess I'm still part of the generation. I don't know. I'm like 31 or whatever, but the older generation as well are getting into investing. They're getting into trading. And what is the main thing that they're going to do when they're getting into something that's completely foreign to them and new? They're going to look for the most simplest and easiest resource and tool to help them invest and to help them trade. SoFi is one of them. Now, yeah, Robinhood has always been the top dog for the most simplest platform, but SoFi is genuinely simple and straightforward. Now, there is a number of other things that are really packaged in with SoFi that we can really see drive its growth. Everything from student loan refinancing. We've seen everything that's been going on with student loans, with student loan borrowers, all of this stuff. And some of that stuff actually had a nice effect on SoFi with a lot of student loan talk and the ability to refinance loans with SoFi because they were actually looking to buy some of these federal loans from the government. Lot to look into to really see how that thing plays out long term and how it can affect the stock. So have business loans, personal loans, credit cards, the stock investment, option trading, all of these things, okay, banking as well. And so it's a very simple platform to where we could see user growth in the future as more people begin to deep dive into the investing and the trading space. Okay, most people are really beginning to take their investing serious, or at least they're learning of it serious. And there is nothing better than have a platform that is extremely simple for them to use as they go on their learning journey. So outside of that, and outside of everything else that is packaged with them on the charts, okay, right now, this is what I'm looking for with SoFi. I want to see SoFi honestly get back to about $25, right up in this little area here. Okay, so I'm going to put a line here. I wanted to see it get back here. We hold up here, and I want to get into a long with this one. Anywhere between 3 to 6 months on my expiration and about 3 to 5 contracts to take profit along the way. Now, if we get below 25, of course, I would look for this thing to come down. For the most part, I would look for around 23.58, and then I would look for this lowest point right around here, okay, at around $19.81. And the reason I mostly look there is we got a very tiny gap here, but nothing major, but it's there. And that will be that lowest point. Now, we get below 18, we definitely coming lower, okay? But we also have to just take into consideration the way that SoFi moves. This here would be another little area of interest that I would look for potential tests and hold up or look for a break, which is around 21.21. So these will be the downside levels. But in the event we get back to 25 and I make a move to ride it up, I will go from 25 in my first level. You see where this little heavy resistance, and keep in mind I'm on the daily time frame. This first area or target will be around $27, kind of where we're playing at right now. But you see all of these touches and rejection there. That would be my first target if we were to come back to 25. My next target would be right here at this little peak at about 30.20, and then its highest point up here at about $32. So let's see what the exact number on that is. That would be 32.73 on that highest point there. So those are just some levels that I would be watching on SoFi, long term and short term. I don't day trade SoFi because of the increments that it moves, but I do cover calls on my shares that I have to just generate income without having to do any calls or puts, and just kind of put my shares at risk a little bit, but I don't go too hard because I don't like losing my shares in SoFi because of how cheap they were when I first got them. Okay, so if I lose 100 shares in a cover call and then I have to rebuy them again, I'll be looking at about $2,700 versus what I paid at the beginning of the year and last year when they were really, really cheap. Okay. And if you don't know what cover calls are, I'll do a pop-up somewhere around here where you can go and check out the video where I explain covered calls versus, calls and puts and the other trading methods. All right. So that's SoFi. Those are some levels that I want you guys to watch. And the next one that we are going to look at is NVIDIA. I did with NVIDIA where I talked about we finally got a channel breakout with NVIDIA. Okay, I had these channel lines about right up in here where I stopped it out, but then it kept going down. Now, first off, NVIDIA has been collecting partnerships, acquisitions, and they have been passing out billions like Infinity Stones. Okay, they just recently did their biggest acquisition of about $20 billion for Grok. Now, this isn't like a standard acquisition. It's mostly a licensing deal or what you would call acquire hire. Just something like that. Okay. But it's mostly a licensing deal, but it's a massive $20 billion deal to really make sure that they are staying in the lead in this AI chart. Okay. And so not only that, they invested $5 billion into Intel. They have the partnership with OpenAI and a number of other things. NVIDIA is the top dog right now in the AI space, and they are the ones pretty much driving a lot of the demand and the growth. As of right now, they have orders for about 20 million chips for, I think it was the H200. Let's click over here and let's see, because they originally had 100% of their market share in China wiped, but now they got that clearance and they're back in the China market. And so therefore their demand hit at about 2 million chips. Okay. So we are going to be seeing a lot of interesting things with NVIDIA. And as they continue to lead, of course, we know the others because they have partnerships with all of Mag 7, and all of Mag 7 literally relies on NVIDIA. So don't let this drive down scare you from working with, getting some more shares, going along with this thing. The key is just having enough time on your expiration. Okay, so look at this first thing here. NVIDIA bought AI chip startup Grok for $20 billion, gaining its unique interface tech talent and boosting NVIDIA's AI model capabilities, solidifying its position in specialized AI silicon. Now, it's saying that they bought them out, but they bought out the startup, but it was mainly a licensing deal between the two. Okay, so what your job will be is to go and to look deeper into that so you can fully get an understanding. I don't want to cram it all into one video. All right. To keep in mind with NVIDIA is NVIDIA has become the first company to hit a $5 trillion market cap. Okay, now they have been seeing some decline, and as they say here, NVIDIA's market cap dropped by nearly 600 billion in one day after the launch of DeepSeek, a Chinese AI model that improves manufacturing efficiency and performance with less chip usage. We're going to talk about DeepSeek in another video, but it's definitely some things that I really want you guys to pay attention to and how that one company could lead you to some gems on the market. But we'll get back to that later. The charts really quickly. With this is what you call a descending channel. Okay, you can see this thing was coming down and we finally got a breakout outside of these converging lines. Now, I missed my mark to make a move on NVIDIA, but I was not quite worried about it because even though we pushed up, I was looking for this thing to come back to retest 184 to 182 to make my move to ride this thing back up. Okay, so we did get a nice little rundown here on Wednesday. Um, it came down right to what was the low point? 186.49. But I'm really looking for us to get back to 184 to 182 to get into anywhere between 3 to 6 months of my expiration and anywhere between 3 to 5 contracts on this one as well to take profit as we go. And I pretty much have some levels already mapped out here. So this right here is where my ideal entry was between 182, 184. And then my first target will be about 189, 195, 203, and that high point that it hit at 212. That is why 3 to 6 months on that expiration is going to be very, very important for me because I want to be sure that I have enough time to let this thing hit all of my levels to take profit along the way. And because of how let's go over here and get an info line and see the size of the move. So I get in at 182 and I attempt to ride this thing all the way up to about 212. That is approximately, let's see, that would be about a 16% move and a $29.67 move. That could be a very, very nice move to catch, but those type of moves take time. So you want to make sure you have enough time on the expiration date. Okay, so that is for NVIDIA. I'll talk more about this levels as we go, but this right here is going to be very, very important that we can hold up around this area here, all this up in here. Okay, go over that 182 and on up to avoid pushing any lower. All right. But I'm confident we can probably hold up as long as nothing drastic happens. But I am definitely waiting on that 182 to be retested before I make a move. It's MRK. Now, if you have been on my channel or if you're in my school community, you will know that MRK has become one of my favorites that I have been trading. Now, let me say this about MRK. It is not meant to be a voucher stock. Okay. It's a safe space or like a stable stock. Because think about it. With MRK, all right, 77% of the shareholders at MRK are institutional investors. And then the rest of us are just the retail investors. So we won't expect some massive moves to happen to the upside or the downside on this one. And it makes it a great stock to hold long term. Now, if you saw the overview that I did on my channel where I talked about going from about $84 on up to 105 on MRK, that was one of my biggest trades. And it beat out all of the other trades that I've done last year. And so right now, what I'm looking at is for us to get back below 104 to retest this 100, 97, and 96 and prepare for another long. This one, 3 to 6 months on my expiration again, in between 10 to 15 contracts on this one. If you go to the option chain for MRK, it is not very expensive in opposed to some others. Okay, you can actually get a really nice spot on MRK without having to spend a whole lot of money. So this is what January, February, March. If we go to March 20th, and let's just say we decide we wanted to get 105 call. It will only cost approximately $600 to do. Now, on a put, it will cost about $400. That's not very expensive to have for a stock that you have 3 months on your expiration date. Okay, so this is one of those ones that you can definitely look into, but the key is getting at a good spot. And in this case, my good spot or my ideal spot is about $96. And if you're not familiar with your setups, let's come over here and we're going to look at this here. This is what you call a double top, or at least one that's attempting to form and looking for this to push back down. So it broke over that 105 resistance right there, and we pushed up to 107 and it stopped out. And so now you can see this thing beginning to come back down. What I wanted to see was a bearish engulfing candle to really solidify that this thing is going to come back down. So now I'm just waiting for it to get below 104 and to really give me some confirmation that we can begin to push down, potentially get into a put, write it down, and rinse and repeat. Okay, so MRK will be one of those ones to watch. Now we get below 90, we are definitely coming lower. This right here has a very nice structure hold up right up in here and as well in this area here. So getting below 96 will open the door for $90. right? Next up will be DLR. This is where we're looking at that digital real estate, okay? And by digital real estate, this is just basically saying that when it comes to AI and when it comes to how massively they are pushing AI, who's going to house it? Who's going to facilitate these billions of dollars that's being pushed out to the chips, the platform, networking, the cloud? They need data centers to do that. Digital Realty Trust is going to be one of those ones that I want you guys to watch. Now, there are a number of them. You got Applied Digital, which is another favorite, which I'll talk about later. We have NVIDIA. NVIDIA has data centers. We have Equinix. There are a lot of them that you can keep your eyes on. Applied Digital really is the top one that I want you guys to watch, but DLR will be one of those ones that I really want you guys to kind of pay attention to. Now, we'll see right here where it says it engages in the provisions of data centers, interconnection solutions, and then we got AI, network, cloud, digital media, and mobile and financial services. All right. So when it comes to the Mag 7 comes to NVIDIA and all the other companies needing somewhere to get this thing going to house all of their networks. They go for hyperscalers. And those hyperscalers will be DLR, it will be Equinix, it will be Applied Digital. Applied Digital just recently signed a 15-year contract with CoreWeave because they have pivoted into the data center space. We'll see that a lot too. A lot of people pivoting to get into the data centers because they see how heavily they're pushing AI. Okay. Now, if we look at their net income and their year-on-year growth, from now this is what 24. So let's kind of look at 25. For Q1, they were down. But keep in mind, when these companies start to build out their hyperscalers, they're going to be spending out billions of dollars. So it would make sense that they've kind of lost money. But once the partnership starts coming in, once they start signing on those new clients, they will rack in billions and it will come in and really start pushing them back where they were. And in this case, in Q2 2025, their net income was $1.03 billion. Then, and look at the growth. That's a 1,180% growth in that quarter. Okay. Then we come over to Q3, we got 67.81 million. So once those partnerships started coming in, this is what we will begin to see. We will see some decline in their revenue, or we will see a massive output of their income, but it will start to increase once, those partnerships begin to come in. And this is why I said, when you see billions or trillions of dollars being pushed out into AI, look on the back end. Don't just look at who's pushing it out. Look at where they're pushing it out, and that will be into data centers. Okay. So DLR is going to be one of those ones that I really want you guys to watch. Now, I don't exactly have the levels right now, but 146.18 is one of those levels that I am watching to see if we can get that to potentially get into a loan anywhere between 1 to 3 months on this one and a couple of contracts to kind of work with. All right. But this is going to be one of those ones that I will be buying shares and averaging down as much as possible. And we'll potentially be doing some short-term swing trades on this one. So keep DLR on your radar as we get more deeper into AI. Going to be Netflix. Now, Netflix had their stock split. And one thing I like about stock splits is that it tells us just how a company has grown and how well it's doing, because they've had two stock splits. The most recent one that we just had was November 17th, and we did a 10-for-1 split. Now, I had one full share of this thing when I got it when it was like 700, and their stock split, the stock came down to $111 per share. But you can see where we are right now. You can see that about $90 on Netflix. Now, I kept getting asked, especially in like my school community on YouTube, I thought this thing was going to rally. I thought the demand was going to be there for this thing to a point where it was going to just go parabolic. And that could be farthest from the truth. It has to find its footing once that stock split happens. So I have my eyes set on $82 for Netflix to come down and to hold up before it starts to really make a nicer move to the upside. Now, even when stock split happened, the price points that you see just reshifts. Okay, so all of these price points and candles will still remain the same. You see what happened when we were down here at 82, or at least in that arena? We came up here, we pushed up about a $10 move. Here, it happened again. And this here, the most recent one, we're not going to look at the price point because of this stock split. We're going to look at the percentage. It made a 62% move to the upside the last time it was down at $82. And you can see how well it's been holding up here since, what is that, November 2024. So here, here, and here. And so getting below this $92 area is definitely going to start opening doors for us to get much lower to those low 80s, 85, 82, where I'm looking to make a move and get into loans and ride this thing up long term. Now, this one I am looking to do leaps, which is getting 2027 expiration dates and getting anywhere between 5 to 10 contracts on it and taking my profit probably like every quarter. That's where my mind was kind of going for Netflix, taking profit every quarter on this one and having enough contracts to do that and enough time on my expiration. So my levels for this one is just watch that $82 level. It gets there, it holds up nicely. That will be the place to make a move to ride this thing up. Okay, so keep Netflix. Don't let the pull down scare you. Okay, we started at 111. It did push, and well, the highest point we're looking at really it's kind of around like 134. That would probably be my last target for this thing, but don't let this thing coming down scare you. It just has to find its footing. And once it get back to a very, very heavy level, it can have that potential to really make a parabolic move over time, not instantly. Okay. So that's Netflix. The next one we're going to look at is TSMC. And if you are not familiar with or is TSM, okay, make sure you're clicking on the right what do you call it? The exchanges. You got the NYSC, and you'll notice we'll have others. So it's TSM for the NYSC. Okay. With them, they are the backbone of this entire AI charge that we are seeing. Without TSM, the NVIDIA will not be able to provide their chips at the speed or the efficiency that they have been able to do. And if TSM goes down, NVIDIA loses out on all of their supply or getting more supply, and they cannot push out their product because TSM is the ones manufacturing it. They also manufacture, everything pertaining to the AI, the robotics, and everything for Tesla. Mag 7 relies on NVIDIA, and NVIDIA relies on TSM. And so they are going to be the backbone of this entire AI revolution that they have been pushing the entire 2025. Okay, so without TSM, none of this stuff would actually be possible. So this is why this would be one of those ones that I will be also investing in very, very heavily this year. Now, today we got a breakout above this right here, this resistance here that I have been kind of waiting to see if we were going to break above it or if we were going to reject and retest back at 267, where I was looking to get in to go long with this thing for a couple of months and a couple of contracts. But because we have officially gotten this closed at 319.61, breaking above this resistance here, I'm now looking to see that we push up, retest here, and then potentially make a move for some shorter term swing versus, going fully long just yet. We got a small little gap here, so we definitely want to kind of keep our eye on that. Okay, so no particular levels just yet. I'm definitely just waiting to see if we get a retest back down a little bit lower, filling in this gap and getting this retest back up in here. But this here, of course, that's a no-brainer. It can get back here. I want to see the gap fill, and I want to see us potentially come lower. Another thing that I noticed with this one was this potential double top that we were working with, which kind of let me confident that we can push back down. But that doesn't mean that just because we broke that we won't still get that double top to play out. We just pushed up a little bit higher and it could still potentially come down. We're just going to have to watch it. Okay. So my 6 stocks that I want you guys to keep your eye on, because I'll definitely be watching them the entire 2026. But we can't forget about SPY and QQQ. We already know that Mag 7 doing well, SPY does well. Mag 7 crashes, SPY crashes. QQQ is heavily in tech. So if the tech sector is down, there's any uncertainty there, we can probably see QQQ get a little bit shaky. So there will be a lot of them that I will be watching, but these will be my main 6 to do leaps on, to do swing trades and some long-term investing on them. So these are swing trade quality as well as day trade quality. MRK is a little bit slower unless you get in a really good spot, enough contracts to ride it up so you can maximize your profits on that. So that's it for these 6. If you have any questions, of course, feel free to ask, or any additional ones that you want to add to everyone's radar, just put them down below. And I can also look at those a little bit later so that we can kind of add to our stockpile this year. But the main thing is focusing on quality stocks and growth stocks this entire 2026. All right. So with that, I will see you guys in the next one.